growing adoption of any technology in all recorded human history. Back in 1997, the internet was growing at 63% a year with 150 million users. Crypto has about the same number of users, and it's growing at 113% a year. So the network adoption of this entire digital asset space continues to grow. So not only is that the technological side, but if the central banks continue to print, the price should do particularly well. So, you know, generally speaking, I've switched 100% of my liquid net worth into the digital asset market. And there'll be times where I'll have less of a weighting, but right now it still seems the right weighting to have. You know, I've spoken to a lot of corporations about this, about, you know, why do they have stuff on their balance sheet? Why do the treasurers have cash? And when you ask them, it's really for a few things. One is to buy back their shares in the US. The other is to buy real estate, and the other is to buy other companies. And the problem is the debasement of fiat currency means that all of those things go up. Their own share price goes up, the cost of real estate goes up, and the other companies they want to acquire go up in value, and their cash doesn't, because they get 3% return on their cash. So trying to get people to shift and realize that if you want to keep up with the appreciation of assets with your cash, because everybody's income is staying roughly the same, they need to start making this shift. So yes, I totally agree that it's sensible. Just depends how much risk you want to take. So I think there's two types of inflation that we need to be aware of. One is this headline CPI-driven inflation that's being driven by supply chain constraints right now. That is different, and I don't think it really affects crypto markets per se. The inflation that drives crypto markets more so is the printing of money by central banks. And you can measure that by looking at the amount the central banks print and the effect it has on asset classes. It's actually highly correlated. And crypto does particularly well when the central banks are printing. Because of its limited supply, it has its scarcity value, and it tends to rise, but it also rises exponentially because it has this call option on the future element to it as we're building out this new technological world. So it works at two levels and works much better than most other asset classes for this debasement of currency that's happening. So I referred before about the exponential growth in adoption. It's the fastest growth in history. We're currently at 150 million users. If we continue to extrapolate the growth rate, in fact, slow it down from 113 down to 83%, so knock it down by 20% or so, 30%, we get to 1 billion users by 2024. That's the nature of exponential trends. And 3.5 billion by the end of the decade. So if I then look and say, okay, if we're digitizing everything and the digital asset space is essentially the digitization of value, that includes the securities markets, how big are they? So equities are about 250 trillion, 300 trillion, global real estate's 350 trillion, global bonds about 250 trillion. So if digital assets are truly the disruptive new asset class that basically absorbs all of those over time, is it so much to say that they could be worth 250 trillion? So that's 100x in market cap. So we will have never seen in human history an entire asset class grow in size by 100x in, I think, 10 years. So I look at log charts to give me a sense of trend. It's very important not to use linear charts because it keeps doing this and going up and down, but log charts are perfect to understand the most important thing, which is Metcalfe's law, which is network adoption is how you price cryptocurrencies, much like how you price Facebook, Google, and others. So Metcalfe's law is basically the number of nodes on a network and the interconnection between them. So you're basically looking how many people are using this, how many people are invested in it, how many people are using it, and what's the activity going on. That is the single most important thing, and you can estimate that, and that will give you trend. So I think trends of adoption are the single most important thing to look at. A nice logarithmic chart pretty much sums it up. Then after that, I will use on-chain analysis to try and see, okay, where are the tokens moving, who's holding them, what is the growth in wallet addresses, and it's basically all the same thing. It's different ways of looking at the adoption. So those are the key things for me. All I do know is the size of the pie is increasing 100x. So if Bitcoin's dominance goes down and Ethereum's dominance goes down and Solana's dominance goes up, they're all going up in price, which is interesting. So we're aware of the trade-offs. The trade-offs are less decentralization equals faster blockchain. So that's basically the trade-off. And so people will take their choices. And so I think there's room for all. Now, I think over time, there'll be different adaptations and different chains will become larger that we aren't aware of right now, or maybe Solana does. The point is, I don't know. And that's why we need to have diversified portfolios in the space, keep an open mind, look at these network effects, who's getting adoption. Right now, it's very clear that the 3 tokens, layer 1s getting adoption are Solana, Luna, Terra Luna, and Avalanche. And you'd probably say the Binance chain as well. So those 4 have seen huge adoption, but they're coming from a lower base. So you tend to get faster price rises coming out of them as well. So I just don't see Tether as a big risk, because risks that are totally known are understood by the market. And I don't see, much like the Chinese miners, everyone's like, oh my God, the Chinese miners are going. This is the end of the world. What happened is everyone just migrated. So if Tether has problems that people think is an issue, they will just migrate. And we're seeing the rise of other stablecoins doing well. So I don't really have an issue with that. The strongest survive and the weakest fail, and the market will adjust to that. If Tether has problems that people think is an issue, they will just migrate. And we're seeing the rise of other stablecoins doing well. So I don't really have an issue with that. The strongest survive and the weakest fail, and the market will adjust to that. The thing is to zoom out. Use those long-term logarithmic charts. Filter down the noise, the excitement. Check yourself in how you feel emotionally and express yourself emotionally about price rises and price falls, because you're in this for the long haul. This is something, if it's going up 100x in market cap, and there's going to be 3 billion people adopting it by the end of the decade, you have to stay in the trade. You have to stay in the thing and keep an open mind. You asked the question about, what's going to happen. Is one of these layer 1s going to beat Ethereum? The answer to everything is, I don't know. And everybody has to be intellectually honest with themselves, is you do not know. So if you keep an open mind, look at the network adoption effects, zoom out, and enjoy the biggest disruption that we have ever lived through in the financial markets and global business models, and embrace it. There's opportunity everywhere.